Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you can find across the markets today. I do a couple of things. The first one is I teach a course where traders learn two specific gap trading strategies. The first one is known as the morning gap trades. This is where stocks that are gapping higher or lower at the open create an opportunity. And the opportunity is for traders that can identify a specific price where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. In the course, traders learn all the specific criteria that's involved in this morning gap trading strategy. Which stocks it works the best with, what volume are we looking for, what time of day this works the best with, how a stock comes into the specific price level determines how much profitability we can expect, and a whole host of other items that are important to the morning gap trading strategy. The most important item is why this works. That's what traders learn, and what also gives traders the most confidence when they take a trade is because they understand why this works. Therefore, with that understanding, traders expect a certain thing to happen at certain price levels. They understand why certain price levels are important on certain charts to certain stocks. This is all discussed in the course at Lazy Gap Trader. The other thing I do is give traders an opportunity to get my gap trades each and every morning sent to them at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the opening bell even rings. Here's a copy of the email that arrived at 8:56 a.m. Eastern Standard Time this morning. Now, today is the Friday before a long holiday weekend, so I really didn't expect much trading activity today, although we did have 4 potential trades on the board, and we actually got 3 of them to hit the specific price levels that were identified in this email, and also these are the same specific price levels that traders are able to calculate for themselves that have gone through the course at Lazy Gap Trader. When a stock does not hit the specific level that we're interested in making a trade at, it's off the board, it's a no trade. So in this case, Lululemon, which was gapping higher at the open, it did not hit the specific level we were interested in, so it's a scratch. It's off the board. However, the other 3, we're going to go over and look at the charts in detail. The first one was Ambarella, AMBA. Gap lower, support levels are $43.78, $41.19, and then $38.59. Stop and profit target is about 30 to 55 cents. These are minimum profit targets. However, keep in mind, once a stock hits the specific price level that we calculate, we expect a price reaction to be within that profit target. The second one was Tech Data, TECD. Gap lower, support levels are 86.86, 83.66, and 80.46. Stop and profit target is about 40 to 70 cents. Again, minimum profit target range. Palo Alto Networks, PANW, gap higher, resistance levels are 148.43 and 153.93. Stop and profit target is about 50 cents to $1.10. Again, minimum profit target. Now we're back on the chart of PANW. The stock closed yesterday at 132.69. The company reported earnings. The stock was gapping higher at the open, providing an opportunity for traders that can identify a specific price where this stock will trade to and then have a price reaction from in the other direction. Remember from the morning email, the resistance level identified was $148.43, and you can see what happened. The stock traded right up to a high of 148.44, reaching the level or exceeding the level by just 1 penny before pulling back in the same candle, making a low of 146.75. So right after the stock traded up to the 148.43 level, it had a pullback that represented about $1.60, which was number one, immediate, and number two, in excess of the minimum profit target. And then you can see what happened after that. The stock went back up to retest the 148.43 level and then traded significantly lower, reaching down to about the $145 area, representing over a $3 pullback from the level identified before the market even opened for business. Some trades, we get the minimum profit target and move on, and other trades, we get much more gain out of the trade. And that's one of the things that's taught in the course at Lazy Gap Trader. I teach traders how to turn trades like this into risk-free, emotionless trades, enabling us to get much more than the minimum profit target out of the trade without taking on any additional risk whatsoever. Next, we'll take a look at a chart of Ambarella, and you can see here the 43.78. It looked like the stock cut through this level like a hot knife through butter. However, when you take the chart down to a 1-minute time frame, you'll see precisely what happened. Now, it doesn't look like much, but at the same time, the stock reacted off the 43.78 level. You can see here when it hit that level, making a low of 43.61, well within the stop loss limitation. In the same candle, the high was also 44.18, which was right in the middle of the recommended profit target range, giving us 40 cents gain. That was precisely what was identified in the email that went out to traders before the opening bell. Some trades give us the minimum, some trades give us a lot more. Either way, we're looking for profitable scalp trades, and at some times we end up with day trades that give us $1, $2, $3, or even more. We learn to take what the market gives us and move on to the next trade. The next one that hit its price target was Tech Data, and you'll see what happened. The stock closed yesterday all the way up over $110 a share. This one, just like Ambarella, was getting one heck of a haircut at the open. Both these stocks were down over 20%, and we're able to identify a specific price where these stocks will trade to and have a price reaction in the other direction. This shows you the power of these levels that traders learn how to calculate in the course. Now, what happened with this stock is, you can see in this candle, the stock made a low of 87.01, and then just a few minutes later was already at a high of 88.50. That's a trade that we don't necessarily want anymore. It gave us the bounce before hitting the level. It came up slightly short and gave us the rally we were looking for. So the stock did come back into the level, and it did give us the trade. You can see here in this candle, it made a high of 87.32 from a buy level of 86.86. That's still within the profit range that we were looking for, but traders that have taken the course understand that we really didn't want this trade anymore after it gave us the bounce from coming up short. Either way, the reason I wanted to point this out is because you can see the power of these price levels that you learn how to calculate, and you also learn why they're important to these particular stocks. That's what gives traders an added confidence when taking these trades. If you want to learn how to make profitable day trades day after day, this is a strategy that you can use for the rest of your trading career. You can learn everything you need to know in order to trade the gaps successfully at lazygaptrader.com. I'm David Frost. Thanks for tuning in, folks.